currency. We have seen, right? We used to post some entries, okay, in a foreign currency, GL entries or entries for even the vendor we have posted in USD currency, and that will take the conversion rate from the OB08 table, right? So if I want to say OB08, this is the table, very important. OB08. This is the table where we update our exchange rates every day. Okay, so this will be done by the end users, or there will be a job which will update the exchange rates. So basing your company code currency, say like your group currency, basing your group currency. Say like you are an USD group currency. Okay, you are having a group currency. Your base location is in US and USD is the group currency. Always these foreign currency revaluations. Okay, the exchange rates are maintained basing your group currency. Okay, and every day you have to update what is the USD rate, what is the GBP rate. For us, the our base currency is INR. So now I have to update all the currencies conversion to my INR. Right, INR is my company code currency. Now, if I get any invoice in USD, then I should also have what is the conversion rate for my company code. Right, if I get $1,000 invoice, I am procuring some material or services from some US company, and I get an invoice in USD, then I have to maintain what is the exchange rate for 1 USD to INR. 1 USD equals to some 72 INR, take it like. So I have to maintain. If I get some invoice on GBP, then I have to maintain 1 GBP is equals to how much INR. 1 AUD, Australian dollar, is equals to how much INR. Right, I have to maintain the exchange rates basing my company code currency or basing my group currency. Depends. Okay. Now, this foreign currency revaluation happens at two places. One is at company code level. Okay. Then at a group currency level. So now what I am doing, I am just doing the foreign currency revaluation at my company code level. This is followed. Every company does that. Okay. This is standard practice followed even in real time, because they always calculate exchange or loss basing their company code currency. Right, and corporate team, they will do the foreign currency revaluation as per their group currency level. Okay, that is for corporate reporting. You forget about that now. At least for company code, we should have this setup. Okay, now if I say I'll take always exchange rate as an M rate. M is an average rate between it is an average of bank buying rate and bank selling rate. Okay, bank buying rate, bank selling rate. We discussed, right? Bank buying rate and bank selling rate. Okay, I will maintain USD is equals to how many INR. Say like I have some currency here. Why have I maintained so much? Okay. This is 1 USD equals to 100 INR. Okay, 1 USD equals to 90 INR. This is the exchange rate on 22nd. This is the exchange rate on 21st, 20th. So every day I have to maintain the exchange rates. Either it will be done manually. In some companies, the team end user team, they will do that. In few companies, this will be updated through a job run. Okay. And okay, because we are in February, fine. What I'll do, I'll also maintain one exchange rate for this. First, let us maintain one exchange rate for 1st January. And okay, from 1st January, I'll maintain some exchange rate. Like I'm getting some invoice on 1st January. So 1 USD is equals to 72 INR. I'll take it like that. Okay, 1 USD equals to 72 INR. Okay, then I'll also maintain. So every day this gets updated. Okay, and because I do foreign currency revaluation on every month. Okay, whatever the currencies or the invoices that I got in USD, Okay, on the month end, it is a job of the end users that they have to reevaluate in the currency. Say like on when I purchase on 1st January, the value was 72. Okay, but on 31st of January, okay, what happened? It has become 80 rupees. What is this problem? Okay. On 31st of January, this has become 80 rupees. Right. Now, when I purchase something on 1st January, how much I was liable to pay? I was liable to pay 72 rupees. But I'll not pay on 72 rupees on the first day as soon as I receive the invoice because I have some payment terms. So I'll take time and I'll do the payment on 15th of February. Understand that I'll do it on 1st of February or 10th of February. That is my payment terms. But what happens even though, I'll put it like this. 1st January, I purchased something, okay, in USD. Okay, that time it was 72. Say like I purchased something 100 USD and what is the value? 7200 is my INR. Got it? How much I was liable to pay? I was liable to pay 7200, but I will not pay this because my payment term, as per my payment term, it is 2nd Feb. Understand 2nd Feb or 3rd February, I have to make the payment. Okay. But what happened now? I have a liability of 100 USD in my books. So can I consider it is only a liability of 7200 on 31st January? No, right? 31st, the value has increased to 80 rupees now. Okay, this is the exchange. Okay, in the sense, my 100 USD invoice now I am liable to pay 8,000. Okay, let me know if you're not able to understand. See, 1st January, I purchased something in 72 when the 1 USD is equals to 72 INR. I purchased one in, okay, some material for 100 USD and my liability was 7200. Got it? Very Saujanya left. Okay. Then but I will not pay this on 1st January because as per my payment terms, I am liable to pay on 3rd February as per my payment terms. I cannot show only I'm having the liability of 7200 during the month end when I prepare my financials. During that time, I have to reevaluate my books. Of course, it is 100 USD only I purchased, but on the month end, because my currency on that day, if I want to pay on 31st of January, then the value is 80 rupees. In the sense, I have to pay 8,000 rupees if I want to pay it on 31st of January. So I have to reevaluate my books and consider this as a loss, right? Because I have got at 7,200 and I am liable to pay 8,000. In the sense, 800 is my loss now, right? 800 is what? 800 is my foreign currency loss. Got it? 800 is my foreign currency loss now. This happens because this have a very big impact on the financials of a company. Foreign exchange gain or loss is having a very big impact on the financials. Even though your business is performing well, because of the inflation, because of the rise in the value of the USD, or because of our INR is getting reduced, the value getting reduced. Okay, I have to pay more. Okay, this has an impact. During the inflation recession time, I have to bear a huge loss, right? And I have to present my books in that way correctly. Yes or no? I cannot show only I have a liability of 7,200. I have to show I have a liability of 8,000 rupees now, which is a loss of 800 rupees. Got it? Ramanjanelu, Satish, Saujanya.
Yes, sir.
Hmm? Right. And this happens even for purchases or anything that is posted in USD currency other than my company code currency. I have to reevaluate my books foreign currency. This process is called foreign currency revaluation at the month end. Okay, this will be done by the end users. So now the setup should be like this. So I have purchased something on 1st January, okay, when I had 72 rupees. But my payment term is 13th February or 14th February I have to pay. But month end I have to do reevaluate my books. What is the total liability? So month end, my liability is 80. Okay. And I'll also create one more because anyway, my actual payment goes on, say like 4th February. Okay, 4th February. Again, this is different. That time it is not even 80 rupees. Now it has gone up to some, say like 85 rupees. Right. So anyway, I will not revalidate for February. I will only consider my January books because I am revalidating on January. I'll consider February end month end has not come. So what I'll do, I'll revalidate my books as on 31st January for preparing my balance sheet. Okay. So this setup will be there anyway in your company. You don't need to maintain it. No. We'll understand this concept. To create your financial statement, you have to perform your foreign currency valuation or revaluation. The valuation covers, what does it cover? It covers all the balance sheet accounts, the GL accounts that you run in foreign currency. Sometimes you will take a loan from a bank, US bank. They will give in USD. Then every month you have to pay them back in USD only. But when you took the loan, it was only 70 rupees. But when you are paying the loan every month, the prices are increasing because of the foreign. Sometimes it will be a profit. I don't think when it will be a profit, but every time if the dollar value is becoming more, okay, then it is a loss. If our rupee value is increasing, then it will be a profit for us. Okay, understand this. Or the balances of GL accounts that are managed as open items. Managed. Okay, not managed as an open items. This will deal separately. Open items that are posted in foreign currency. Okay, any open items, say like I take a foreign currency loan, I'll post one GL, even that can also be valuated. Or vendors, I'll purchase some USD currency. Okay, services in USD. So I have to validate the books also. This happens in two ways. The group company and a company code currency, group currency and a company code currency. But because for me, my company code currency and group currency are same. So I will revalidate my books to INR value. Okay, we'll use a different valuation methods for GLs and a vendor and customer open items. Okay, now let us do it for a vendor. This is important. Okay, what are the steps that we have to cover? First is we have to define an accounting principles. Okay, configuration steps. First is you have to maintain exchange rates in OB08. Okay, maintain some rates on 1st of January and maintain some rates as on 31st of January. If possible, you maintain as on 1st of December and 31st of December. That is also good. Okay, because we can run the foreign currency revaluation 2 times. Okay, OB08. I'll maintain my books 1st of December. Okay, always my in line with the INR, right? What I'll do. Anyway, 1st of December is maintained 81 rupees, or I'll make it as 80 rupees. Okay. And I'll revalidate my books on 31st December. 31st December is not maintained. Then what I'll do, I'll maintain 31st of December. Okay, let it be 90 rupees. Okay. 1st of December and 31st of December I have maintained. Okay, next step is you have to maintain the accounting principles. Accounting principles anyway, if you are into new project, implementation project, then you have to check if the accounting principles are standard delivered by SAP, then that's fine. Or else if you want a new accounting principles, you have to create one. I'll show you how to create. Okay, then assign your accounting principles to your ledger. 0L is your standard ledger or a leading ledger. Okay, we'll discuss more on this. What is leading ledger or non-leading ledger? always any entries that you post that will go to a leading ledger, which is 0L. This is required when you run financial statements. Okay, why ledger is required? F.01. Maybe this is my financial statements. I want to draw financial statements. It will ask for ledger. Okay, you'll understand more on this when we do new GL. Okay. F.01 is how you check your financial statements. Maybe if you are working, you will not have an access, but try. If you have access, you can check the financial statements. Okay, let us look into it. System is running slow. Okay, this is required when you draw the financial statements. We'll understand more on this, what is ledger or non-leading ledger. Okay, then once you create the accounting principles, you have to assign this to a ledger. Okay, leading ledger or non-leading ledger. For now, we'll use only leading ledger. Then we have to create some valuation methods. Okay, in the valuation method, what I am saying, this is for my vendor. Okay, say like I purchase some materials for vendor. I am saying always evaluate on the month end, and document type. When you evaluate, you should also post in our books, right? Then only it will show either loss or profit during that month end. Okay, and you have to define a valuation area. There are few steps. They will ask, sometimes they'll ask these configurations also. Okay, very simple, 4 5 steps you have to do. Okay, valuation area. Then you have to assign that valuation area to accounting principal. See, one thing, first create accounting principal, then assign it to your leading ledger, then create a valuation area, assign that valuation area to your accounting principal. These 3 steps or 4 steps you have to do. Okay, then you have to create some settings. Let us go step by step creating this. See, when I want to draw the financial statements, it will ask for a ledger. Okay, which ledger it is. So all the postings, whatever we do, that will go and sit in our standard ledger, 0Ls, unless specifically mentioned that it should go to a different ledger, which is called non-leading ledger. Okay, we'll understand more on this. Okay, when we do new GL. Now we understand only we have a leading ledger and we generate our financial statements only in leading ledger. And our accounting principle is, maybe you can take India AS or India GAAP, whatever it is. Okay. I list the steps here. First one is you have to maintain your exchange rates. Ensure that exchange rates are maintained in this table. Okay. Second, okay, you have to define your accounting principle. Okay, because you are listening for this for the first time. Okay, don't worry. You may get little confused, but if you do it 2 3 times, you'll get this. Okay, define your accounting principle. Now I'll say my accounting principle is India AS. Okay, accounting standard. Then we have to assign this, okay, accounting principle to my leading ledger. Okay, and here my leading ledger is accounting principle is IN, and I'll map it to my 0L. Okay, I am making it very simple way, okay, for you to understand. Got it? Now define valuation method. Okay, we will define one valuation method for vendor. Okay, this vendor will also work for customer. So I'll define valuation method for my customer and vendors. Got it? Now, fifth step. Define valuation area. This valuation area will tell whether you want to do it at a company code level or at a group currency level. Okay, this can be valuation. I told you, right? You can do it at a company code currency level, and corporates do it at a group currency level. Okay. Anyway, we'll take it at a company code currency level. we'll do our valuation of the books for my company code currency. If your group currency is different, yes, you can also valuate as per your group currency. Again, you have to create some different valuation area. Okay, that will do now. Assign this valuation area to your accounting principle. Okay. Say like I'll create one valuation area. Reliance Energy, right? I'll create one valuation area and I'll assign that valuation area to my accounting principle. What is my accounting principle? This one. Got it? And this valuation method I'll create with 250. It will only allow this. Okay, Reliance. Got it? Next, this settings is important, where you maintain the OBA1. This is called account automatic account determination. Okay, we have seen, right? Automatic account determination. It will happen in EBRS. We'll assign the GLs and system will take based on the bank statement. And we'll also do automatic account determination in FIMM, where based on the valuation class of material, it will pick the GLs. Automatic account determination in the sense, GLs will be picked automatically. We don't need to maintain GLs while posting entries. Okay, system will automatically pick the GL entries based on some rules. Okay, so OBA1, it will pick the GLs based on some settings that we have done. If you do the settings, then it is fine. Now, what is there in OBA1? Okay, we'll value the open items, or we call it as a GL. Open item managed GL. We will run this foreign currency valuation, okay, for these GLs. And if I want to run that, okay, I need profit account, okay, profit GL account. If I get some profit, I have to account to some GL account, right? I have to get some loss GL account. I have to create this. Okay, I'll maintain it like this. Exchange profit. Okay, and I'll maintain exchange loss. Okay, and I should also maintain one balance sheet adjustment account. For preparation, it is little, it will create some confusion, but yes, okay, 4-5 times if you read it, you should be able to deliver this. They will ask the configuration steps very rarely, because even the interviewer will not be very sure on this. It will be done only during the initial stages of the project, and you will not get any issues on this, okay, in a support project. That's why interviewers will not have clear idea on it. But yes, if you explain these steps, okay, they'll feel happy, right? So you have to create GL accounts, exchange profit, exchange loss, and balance sheet adjustment account. Got it? Now, open items. Okay, which open items I'll do? I have purchased some material from vendor in USD. Okay, but behind the vendor, there is one account. What is that account called? Sundry creditors reconciliation account, right? Behind every vendor, we have one balance sheet account, which is sundry creditors reconciliation accounts. Vendors, I cannot directly run the foreign currency revaluation because this is my sub ledger and this is my main GL account. You have to run the foreign currency revaluation for the GL accounts. Even though you purchase from vendor in USD, you have to run the foreign currency revaluation by giving the vendor, and it will post entries into a sundry creditors reconciliation account, which is my balance sheet account. Got it? Clear on this? Any confusion? No, right? Okay. It will be a confusion initially, don't worry. Okay, no need to get scared. Now, let us go and do the configurations first. OB08, we have maintained, right? I have maintained my average rate for my currency. Base currency is INR. Okay. I have maintained for 1st December, which is 80 rupees, and 31st December, it is 90 rupees. Right, 1st December, it is 80, and 31st December, 90 rupees. Okay, leave it. Let us keep this here on. Now, define accounting principles. Okay, first step is we have to define accounting principles. Let us create one accounting principle, SPRO. Okay, financial accounting new. Financial accounting. Okay, new global setting. Right, ledgers. We have to create accounting principles. So always your accounting principles lies in your parallel accounting. Define accounting principles. Next step is assign accounting principles to ledger. Let me open this. I have some accounting principle IN already. I can also create. See, very simple. Okay. I can also create. IND is my accounting principle. Okay. India GAAP accounting principle. Okay. And okay, I'll just leave it India GAAP accounting principle. Okay, which is for my 0. Right, this is very simple. How to create accounting principle, create your accounting principle, India GAAP accounting principle. Okay. Always you will account your books or your post your transaction based on some accounting principles. You have to check with your company if you are working, which accounting principles they are using. They want to report either in a local GAAP, which is our India is India GAAP, or whether they will report in IFRS accounting principle. Every accounting principle has some set of rules. Okay, say like for accounting principle India, I can take a loan from my subsidiary companies without any interest. That was the rule. Okay. That is the rule for India is. For my subsidiary company, I have DuPont Foods, then I have DuPont Material. I can take a loan at free of cost. That used to happen in India is. Then IFRS came in. IFRS says you cannot take the loan at free of cost. You have to take the loan at interest. Maybe take at a lower interest rate. But yes, it is also because other company is paying you and that is share listed company. You cannot take a loan money from that companies in such a way. Okay. Every accounting principles has different set of rules and regulations. Few accounting principles say your assets, okay, you can use 3 years depreciation. Few accounting principles say you cannot start your depreciation in the first year. Depends again. Okay. Just a small background about accounting principles. Okay, India GAAP, I am creating this India GAAP. Okay, accounting principle, assign accounting principles to the ledger groups. Okay, where is my accounting principle? India accounting principle, target ledger is 0. Okay, I can do this. Got it? Create an accounting principle, assign accounting principle to your leading ledger. Then define your valuation method. Okay, go back. Define your valuation method. Financial accounting, global settings. Here it will be in general ledger. Financial accounting new general ledger. Then it will be in periodic processing. Validate. Okay, yeah, we have it here. Define valuation method, then define valuation area. We have all these things. Assign valuation area to accounting principle. Everything is here. So all 3 steps we can do it from here. Define valuation method. Oh, we are running out of time today. Uh, okay, what I will do? Um, I'll copy one. So you have to create a valuation accounting principle according to this. Create new and you create like this. Okay. You have to do it fast. Then always evaluate post per line item. SA is the document type. Exchange rate type. We always value at a exchange rate type, average exchange rate, and copy this exchange rate type from invoice reference. Always will maintain exchange rate type M on the invoices. Okay. Select this, save it, or you can directly create a new. Okay, you will not have it, directly create a new with these settings. That's it. Okay, and time dependent, do we have any time dependent on this? Nothing. Okay, leave it. We can also maintain this, how long this is valid, we will not do that. Okay, we have created a valuation method. Then define valuation area. Valuation area, anyway, I have this valuation area, I'll create a new one. Okay, valuation area. I'll create this. What is the validation method we have created? 250 50A. And this valuation area is important because I evaluate my books in company code currency only now. Okay, even if I purchase USD, I'll evaluate against my INR currency. Valuation area is done. You can also choose group currency here, see like this. Okay. Then assign valuation area to accounting principle. Okay, what is my valuation area? This is RE, right? Valuation area is my RE. And what is my accounting principle? My accounting principle is got it? I hope these are the steps. Okay, valuation area. Okay, again. Now, important thing is we have to maintain OBA1 settings. OBA1, automatic account determination settings. Here we have two keys. One is KDB and one is KDF. Okay, KDB is used in a different way. KDB is used, you have to maintain a separate exchange rate key, and because open items only can be revaluated, and here you can also revaluate your non-open item managed account, say like term loan account from a US bank. Okay, those things you can maintain it here. Just two difference. They'll ask what are the important transaction keys. One is KDB. You can revalidate your books using exchange rate key. Just keep that in mind. Okay. And we will do, this is for open item managed GLs. KDF is only for open item managed, and through KDB, we'll define a new structure, which is called exchange rate key. We'll revalidate our books, but we'll not do this now. We'll only go with KDF. If I click on KDF, it will ask for my chart of accounts. Sorry, my chart of accounts is not defined. Okay, this is chart of accounts is Reliance, right? My chart of account is Reliance. In the Reliance, now it will ask so many things. Okay, for loss account, which account I have to use? For exchange gain, which account I have to use? And when there is a valuation, which account I have to use? Balance sheet adjustment account. So these accounts have to be maintained. Against which account? Now I'll choose this account. My company code. Okay, and choose my reconciliation account for the vendor. I have to choose my, okay, reconciliation account for the vendor I have to choose. Okay, and I need loss, gain, and balance sheet adjustment account. Let me quickly go and create these GL accounts. 2501. Okay, under assets, I'll create one GL account. Let me one and I'll copy. Okay. 200501. Okay, fine. 200501. Under assets, it's a balance sheet account. I'll create balance sheet adjustment account. Okay, for foreign currency revaluation. Okay, I'll maintain it like this. FCB. Okay. Foreign currency revaluation account, balance sheet adjustment account. Go to control data because this is a balance sheet account. Okay. Only balances in local currency. This is not reconciliation account. Fine. This is not reconciliation account, simple account. Save it. Okay, balance sheet adjustment account. And loss, foreign currency exchange loss is always a expense for me. Okay, is always an expense for me, right? So what I'll do, I'll create one GL here. Okay, which is my 17 expenses and any account. You can directly create or copy one account and change this. Okay. Exchange loss. It will be a loss. If there is any foreign currency exchange loss, yes, then you need to post the entries to this account. This is fine, simple account. If I have some foreign currency gain, because the dollar value has come down and I'll have some gain, okay, then I have to create one account, which is 50. Take it like this. Okay, and this is also a simple account, Z001, INR, line item display. This is value, same thing. This is a P&L account. Okay, P&L account. Exchange gain account. Okay, exchange. If there is any gain, I want system to post this account. All right. So I've created all these things. Okay. Now we are using KDB. So where we assign these GLs like this. Okay. Now I'll go to OBA1. Let this screen be like this only. Now loss account I have created. Here is my foreign currency exchange loss. I can also run a full sort here. This is foreign currency exchange loss and foreign currency exchange gain. Okay, same account goes here, exchange gain. This is loss. Okay, anyway, this you can do it for translation also. This is loss. This is gain 3000501. And balance sheet adjustment account. I want this. Where's my balance sheet adjustment account? Exchange balance sheet adjustment account. Okay, this is my balance sheet adjustment account. Okay, this is fine. Save it. Right. OBA1 is very important setting where you are going to run your foreign currency revaluation for the open item managed GL accounts. This is a reconciliation account. This reconciliation account is for vendors. Okay, if you go and open your reconciliation account for vendors, you will see whatever the entries that you have posted on the vendor, it will also come and sit in this account. And this is an open item managed. Now I have all the INR entries only. If I have USD entry, I have to reevaluate the balance of this GL account. In the sense, I am reevaluating the purchases from the vendor. Okay. Now, once you are done with this setup, what you have to do, you have to post one entry, F-43. Okay, I'll post for December because I can run the foreign currency revaluation for 2 months. Okay. Now I'll purchase in USD. Okay. If I purchase in USD, okay. Foreign purchases. Foreign purchases. Okay. 31. Who is my vendor? And okay. Okay, fine. I'll purchase at 1000. I'll purchase 1000 USD. So when I purchase 1000 USD on 1st December, what is my exchange rate? On 1st December, it will be 80. In the sense, 80,000 rupees I'll get now. Right. It is 80,000 in local currency. If I press enter, you will see that. Okay, foreign currency purchase. See, I'm purchasing 1000 USD because on that date, the exchange rate is 80 rupees. 1 USD equals to 80 rupees. Then total amount is 80,000 INR. Okay, and expenses account debit. I'll choose any expenses account. Like any expenses. Right, tax code is required. Right. Display currency, if you want to see that in INR currency, it is 80,000. If you want to see that in document currency, items in document currency, 1000 USD I am buying. And this is in items in local currency. If I click on display currency, it will change automatically. Okay, 80,000 rupees I am purchasing. In the sense, 1000 USD material I am purchasing. This is on 1st December. Now on 1st December, my exchange rate was 80 rupees. 80,000 I have bought. But my payment term is somewhere in February. Then I don't know what rate it will be. Okay, maybe I'll end up paying more. But because I am in December year end or month end, I have to reevaluate my books, whether it is only 80 rupees or now the prices have increased or not. Right. That time my USD has become, say, like I'll take 85 rupees. Okay. 85 rupees is the currency rate at that time on the 31st December. Okay. Now what I'll do, I'll go to my foreign currency revaluation run and check. Okay. What is my loss or gain? Okay. The FAGL underscore FC underscore, okay, valuation. This is the transaction code for foreign currency revaluation run. Okay, this is done by end users. Your job ends there when you do the setup, but you have to do the testing also, right? Company code is 2501. I am doing at a company code level and I'll do this on a month end, okay, or a year end. What is my valuation area? My valuation area I have created as RE, right? And I want to create the posting. Okay, before that, before creating a posting, let me do a test run and check. For my open items of the vendor, valid vendor open items. Why I'm saying vendor open items? If I go here and check FBL1N, I purchase some goods for Satish, okay, from Satish in USD currency. Okay, if I want to see that, I'll see them here. These are in INR. Okay. This is local currency, right? If I want to use it in document currency, then it is 1000 USD. Okay, 1000 USD. So I have to reevaluate my books of the vendor, but I cannot directly do it on vendor. Where I can do? I can do it on my GL account, which is Sundry Creditors GL account. This is my Sundry Creditors GL account. I have to validate my books for this 1000 USD. Okay, this is foreign currency purchase. When I want to do it, I want to do it on 31st December. Okay, now what is the difference that you will get here? You will get, see, you purchased that, what amount? You purchased that when the value was 72 rupees. All right, 72 into how much? 1000. You purchased that 72,000 rupees. Right. Then your, what was the value? First December, yes. Okay, sorry, it was 80 rupees. Okay, it was 80 rupees in the sense you purchased the goods at 80 rupees, which is 80,000 rupees. Okay, now the value when I am doing this foreign currency revaluation, now it is 85,000 rupees. Right. What is the loss now? I'll have a loss of 5,000 because I have to pay more now to the vendor. Right. Now I'll see that in my foreign currency revaluation against this account. What I'll do, I'll validate my vendor account here. Even if I validate vendor account, it will go and do that in a GL account. All right, you got this? Now I will execute and check. Anyway, batch input is not created. I am just valuing it. I am just checking. See what is the value now? 1000 USD I have purchased and I purchased at 80,000 rupees, but on 31st December it is 85,000 rupees. In the sense, there is a valuation difference of 5,000 rupees. If I want to go and check this posting, it will say it will be posted on 31st. Automatically, this will get reversed on the first day of next month. Okay, because I will know the exact difference when I pay to the vendor. Okay, but on month end, I have to revalidate my books. That is a purpose. So month end, it will post what is the loss or profit. Immediately next month, it will reverse the entry. Okay, I'll go back here. Okay, this is my difference. What I have to create a batch input. Session name, I'll say foreign currency revaluation for 2501. Okay. Document date, I'll say, okay, 31/12/2023. And I'll say 31/12/2023 is the posting date. Okay, it will post entries on 31/12/2023. It will immediately reverse in the next month. Okay, anyway, this is not required. Leave it. We can create it. Now execute. It will create a batch input. Okay, with this postings. Okay, then I'll go back. What I'll do, SM35. Yes, I'll take another 5 minutes. Foreign currency SM35, you'll go to a batch input session, process this. Display errors only. Same like yesterday, we have processed a job run, right? Session run, same way. Process it. Yes. Session overview. So if I double click on this and check the logs. Okay, see. This document is posted now. In the sense, two transactions are posted, two transactions are read. One is posting of exchange loss. Immediately that will be reversed in first day of next month. Right, where I can check that, I'll go to my this GL account and I will refresh this. Okay, sorry. The entry would be like this. Okay, it will not directly post to that account, even though there is an USD amount there. It will post to your balance sheet adjustment account and the foreign currency loss account. Okay, I'll go to this GL FB03. It is a loss, so debit loss account to balance sheet adjustment account. This is not in USD INR. If I see here, there is an exchange loss posted of 5,000 rupees against this balance sheet adjustment account. Okay, only we are doing a revaluation month end. This will not posted to vendor account or that vendor GL account. But it will consider what is there in this GL account. Okay, 1000 USD and it will post to this accounts. Okay, exchange loss or gain. Now, I will pay this vendor F-53. Okay, I'll take another 5 minutes. Before that, let me verify exchange rate table. Okay, I had a 5,000. Then I want to pay it on 10th January. Think that I want to pay it on 10th January. Okay, for the vendor. 10 January 2024. 10 January 2024. I am paying that vendor Anyway, that we got the invoice in USD, so I am paying him in USD only. Okay. I'll use F10 or I'm using now here. Okay. What was the amount for the vendor? What was there in the vendor account? 1000. Right. 1000. 1000 USD I am paying. Okay. To which vendor? Okay. Any entry is required in the value table. I am paying, which I got on 12th December, right? Only this invoice I am paying. Okay. 1000 rupees. Now see here. Actual loss. What is the loss? Okay. That entry is posted and reversed. Now, if I go and check, it will show what is the actual loss. Why it is 20,000 now? Because I purchased the goods at when it was 80 rupees. But when I am paying now, what is the actual loss? It is 100 rupees. 1 USD equals to 100 rupees. Then I will have a loss of 20 rupees. Right. When I purchase 1 USD equals to 80. Now when I am paying, it is 100. Okay, INR. 1 USD equals to 100 INR. So my loss is, if I want to pay, okay, 1000 USD to Satish, then it will be a 20,000 loss for me. Right. It will not appear here. If I want to pay 1000 USD to Satish, for 1000 USD, it is 80,000 rupees when I purchase. But when I am paying, it is saying it is a loss of 20,000 rupees because the value of foreign currency or USD value has gone up. Okay. Post it. For this, this is little confusing. Okay. You have to practice this 2-3 times, then you'll understand clearly. Okay. The configuration steps are little confusing here. Okay. They may ask these configuration steps. They'll also ask what are the entries that will be posted. Okay. During the month end, it will be exchange loss or gain to balance sheet adjustment account. Okay. But this is only on month end entries. Month end, when you run the foreign currency revaluation. But when you actually pay the vendor, okay, when you actually pay payment of the vendor, okay, then it takes the foreign currency revaluation or the exchange rate, what is there on that date. Then what it will say, it will anyway, vendor account should be debited with the same amount, 1000, right? And what is that? Bank account. Bank account, it is credit, okay? 1000, what is that? 1000, I can say bank account, 1 lakh rupees, right? If I take that, it is 1 lakh rupees. Here it is. Vendor account, anyway, I had when I purchased, it was only 80,000 rupees, debit, credit, and it is a loss for me of credit, loss, okay? Loss is always debited. Okay, this will be the entry. Okay, vendor account debit to loss account of 20,000 to bank account credit. So you have to pay more from your bank account of 20,000 rupees. Right, this is the entry when it happens during the payment. So you have to by heart these entries and you have to be sure on this. They'll ask these entries. Okay. Right, I will post this screenshot also and I will also send the notes and recording. Please go through it. Okay, don't worry. This is critical in fact. Okay, this hardly in 10 interviews, only one interviewer will ask this question. Okay, but it is better that you learn this also. Don't give a chance because for Balakrishna, for Deloitte interview, they have asked this question. Okay. Okay. We'll connect again tomorrow. I will learn FISD topic tomorrow. Okay. Take care.